Good afternoon, everyone, and welcome to this Avalara webinar in partnership with the CFO and Accountancy Age, Unlocking Global Growth, Tracking Tax Challenges for Digital Businesses. My name is Victoria Pavlova, and I will be your moderator for this session. Before I introduce the panelists, I'd like to cover some basic housekeeping, as per usual. First, please feel free to submit questions throughout the session, as we will only be answering these at the end. You may submit your questions using the aptly named questions box at the bottom right-hand side of your screen. If you have any technical issues, please submit using the same box, and a tech specialist will assist you. The recording will be available on demand after the session, and you will receive an email with all the information in the next couple of days. We do have some extra resources, which you can access using the handouts tab at the bottom right-hand side of your screen. Hopefully everything is clearly signposted, but again, feel free to use the questions tab to inquire. And lastly, we will have some polls running during the session. They will pop up on your screen. Please select and submit your answers when prompted. And while we wait for the first poll to appear, I'd like to introduce you to our panelists. So today I'm joined by Olivia Gates, EMEA and APAC Tax Technology Manager at Avalara, as well as Andy Campbell, Global Solution Evangelist at Certinia. Lovely to have you both on board. Thank you for taking the time to talk to me today. Would you like to give a quick kind of intro as to what you do, your background? Olivia, maybe you'd like to go first?
Yeah, absolutely. Thanks, Victoria, and lovely to be here today. So, hi, Olivia here from Avalara, and I'm one of the regional tax technology managers here at Avalara, and we specialize specifically in supporting indirect tax compliance projects for businesses all over the world, be it registrations, monitoring the relevant thresholds when you're hitting them in certain countries, automated tax calculations, and then the remittance reporting and any historical tax compliance projects. We're the partner that supports your businesses in doing that all over the world. And with global offices everywhere, we can cover multiple countries, multiple locations. We're just really I guess, are the only people who really enjoy tax. So that's us.
Thank you. And Andy?
Olivia, you're right. You're the only people who enjoy tax.
I think so.
I'll give you that. I'll give you that. Cool. So I'm Andy Campbell. I'm the Global Solution Evangelist for Certinia. All of our operations based out in EMEA. People may not know Certinia. We provide the platform for services businesses. We used to be known as Financial Force, but we changed our name literally about 5 or 6 weeks ago. So same company, same things, but just a slightly different name. We provide business applications for primarily services businesses or organizations that have a services element to them. Our technology is based on the Salesforce platform. Salesforce, one of our investors, one of our customers. And we started off about 14 years ago providing ERP financials applications on the Salesforce platform. We were the first ERP, one of the first ISVs on the Salesforce.com platform. But our portfolio has increased over time and moved into different areas. We're the market leader in PSA, or professional services automation capabilities. So if you're a services business, professional services organization that needs to run a team of people that are out delivering services to your customers, then a PSA solution typically underpins that. We've extended our platform to include services CPQ for producing service estimates, customer success management as well for those SaaS businesses that have a customer success element into what they do. And all of those components come together now to provide the platform for a services business. If you can see up in the top right-hand corner, the little visual there, it brings together everything you need to sell, to staff, to resource, to do all the finances, and then to support your customers on an ongoing basis, all on one platform, all in one place, all kind of joined up, all on one sort of data model. We've got loads of customers, about 1,400 customers globally, lots of big names that Salesforce, Red Hat, Dell, Philips, that rely on us to run their services business, but also lots of smaller and rapidly growing customers, the kind of people that we're going to be talking about today. Those businesses are moving across different geographies and growing in size. We too have global offices all over the place, about 1,000 employees. Perhaps the most important stat there is we have a very strong focus on customer success, as all SaaS companies need to have, and we're very proud of our NPS and the way in which we continue to grow as our own business and how we continue to service our customers as well. So Victoria, back to you.
Thank you. Some serious SaaS credentials there. And not least of all, managing to survive and maintain growth throughout 3 years of sustained turbulence in the tech space, starting with the pandemic, during which a lot of tech businesses kind of managed to accelerate growth for various reasons. And then the sort of cratering, I hope that's not an overstatement, of technology at the tail end of last year, from which the sector is just now starting to recover, it seems like. So it's been a couple of years of kind of continued change. So Andy, I'll pose this first question to you as a sort of opener. What have been the catalysts for growth, especially international growth, for SaaS and digital businesses during this time? And the audience will also see the same question in the form of a poll on their screens now.
Yeah, it's interesting. I mean, it's not tax. Let's say that. I mean, I know that today's webinar is all around tax. Tax is kind of a necessary evil, but organizations don't grow because they want to pay more tax. It's basically down to the whole Ansoff matrix. We want to grow as a business because we want to grow in terms of profitability, we want to grow in terms of reach, and all those kind of things. And we need to access new markets. We need to have developed new products. We need to continue in terms of innovation, because if we don't, if we stand still, then we're going to be overtaken by our competitors. So we continually need to innovate. We continually need to get better and better, because it's a very competitive marketplace out there, and we need to continue to survive. Second thing is that a lot of companies, particularly in the growth space, do have an external dimension to what they'll be talking about. So they will might be driving towards an IPO. They might have venture capitalists or PE firms that are investing in those organizations, and they will be looking to have some sort of exit strategy. They'll be thinking, 5 years time, we want to be X big, we want to have X profitability, etc. So there is a mandate for change and a mandate for growth that is often imposed by external investors or external contributors. And I think that is, that's an important context for what's going on. And the last thing I want to say is that in the good old days where you made stuff and you sold stuff and you were delivering things, there were physical constraints on what you could do. You could only, your warehouse was so big and you had to spend a load of money to get a new warehouse. But in this digital world, it's no longer an issue. If you want to sell through a marketplace, then you can just grow like Topsy very, very easily and very, very quickly. And you look at how some startup businesses have achieved that over the past few years. I think of the growth of TikTok, for example. It's grown hugely within a very short period of time. So the constraints that physicality offers to us have been removed. So for digital businesses, no reason why you can't grow very quickly, both within one jurisdiction, but also in terms of different geographies, different product areas. The shackles are off. You can do what you like.
Absolutely. And we're actually seeing some of what you're saying mirrored in the poll results. So the poll indicates that some of the tailwinds that businesses are experiencing are product innovation and differentiation. That's 24% of attendees have answered that. Effective marketing and customer acquisition strategies for 21% of businesses. Strategic partnerships and integration opportunities for 17%. And scalability and infrastructure investment for 3%. Oh, apologies. And another 3% answered data analytics and personalization capabilities. So some of those tech enablements are certainly helping to drive growth for a lot of businesses. So we've talked about the tailwinds. What about the headwinds? What have been some of the constraints or challenges to international growth?
That's for
Andy,
me
you
again.
can-
Yeah. It's been difficult. I mean, speaking from our organisation, we've grown about 50% in the past 3 or 4 years or so. Start of COVID, we actually opened an office internationally to support our European business out of Utrecht. We have grown quite dramatically in terms of our reach and in terms of our size and in terms of our product portfolio. It's absolutely possible to do that. However, there are particular strategies that you need to adopt in order to make sure that you don't trip up and fall over as a consequence of growth. In our experience, typically they fall into 3 areas. It always falls into 3 areas. It's people, process, and technology. And if you think about them in that sequence, you think about the people bit. You're going into new countries potentially, where you've got no current experience, you've got no issues with language, with currency, and all those kind of things. You have no presence in those organizations. You may have nobody who speaks that language, and you need to grow in that space. So that's an issue around people. You may have no processes in place to support that. You'll have different legislative frameworks, different regulatory environments that you have to operate in that you have no experience of whatsoever. I mean, you dip your toes into the American sales tax environment. I mean, there be dragons. It's a scary place to be. Processes can become more complex the broader the reach and the more that you cover as well. And you think about how the technology landscape that supports that. It's if you're running your organization as a growing business, 100 people, you can probably get away with using QuickBooks for your accounts, and you can run everything else on spreadsheets. That's kind of okay, and it works. But you get much greater complexity when you go into different geographies, and your technology infrastructure may come under some degree of stress. And it gets to that point where spreadsheets no longer valid. You can't do it. You risk losing revenue. You risk making mistakes. There's duplication of effort and all that kind of stuff. So, your technology framework needs to be looked at as well. So I'd categorize the big issues into those 3 buckets, the people, the process, and the technology.
Absolutely. And from a UK and European perspective, we oftentimes talk about the US as a jurisdiction, and in reality, it's 50 jurisdictions. But absolutely, some of those challenges we're going to discuss in a bit more detail, starting with tax. So on your screen now, you should be seeing the second poll of the day. What has been the most difficult part of navigating tax compliance as you have expanded internationally? And I'd like to throw the next question actually to Olivia. How does the compliance landscape differ for growing SaaS and digital businesses compared to traditional bricks and mortar? And some of the specific tax considerations, obviously starting from sort of a bird's eye view globally.
Yeah, absolutely. Simply put, quite significantly, and Andy touched on it there, it really boils down to the joy of kind of jurisdiction complexities. Suddenly you've got an environment where SaaS and digital businesses can serve customers globally without any physical presence in each country. And with this international presence introduces quite a lot of challenges, as you can imagine. You touched on the US there, but more importantly, it introduces challenges in terms of actually beginning to understand what the rules and regulations are around relevant taxes in that specific countries. And I think one of the most challenging areas that we've certainly experienced for SaaS and digital business growth is the ability to track it, track relevant country thresholds, monitor, be it, sales on a state-by-state basis for the US, or work out what the new regulations are, and, if these are relevant to the services that you're providing and whether they're taxed and whether it's per country or per region or per state. It can be a real challenge, and that's an additional challenge. Brick and mortar stores, you just got that physical presence, where you are, usually what your local taxes are. I guess one other thing there I'd like to kind of touch on as well, and I think Andy will touch on this as well at some point, is a lot of the businesses we work with have a challenge around things like licensing You know, it is, every digital business is dealing with software licensing, and there are very unique legal considerations in each jurisdiction. The same applies with the kind of regulatory environment of digital services. And we're seeing a real rise in businesses facing these very specific regulations that are different from those that affect the physical stores even. So like fintech companies, they have to comply with financial regulations. Same with health related SaaS businesses. You know, they've got to comply with healthcare laws that are in place. And that comes as a bit of a surprise sometimes. You know, it comes as a bit of surprise that suddenly you've got this model that has to comply with everything else, when actually it's, you know, it is all digital.
Apologies, slight freeze on my end. No, absolutely. That completely makes sense. And would you be happy, Olivia, to go over some of those most recent SaaS tax developments in regulation that businesses should be watching out for?
Yeah, absolutely. So there's lots of acronyms when it comes to the world of tax. So I'll use a couple, but you know, several countries have introduced and are, you know, in the process of proposing what's called DSTs. Okay, so it's digital services taxes, and these are aimed directly at taxing revenue generated by digital businesses within their own jurisdictions. So you may think you're covered, but just keep an eye out for DSTs. They are typically targeted at larger tech companies that offer digital services and have significant user bases in these specific countries. A couple of other changes as well, kind of to keep in mind, is VAT changes. So September 21, although it feels a long time ago, there are still, you know, lots of rules catching up, but the EU introduced new VAT rules for B2C digital services, which had quite a significant impact on how businesses handle VAT for cross-border sales within the EU. You know, traditionally we've been familiar with how VAT works for cross-border sales with physical goods, but you know, that VAT rule came in for digital services directly to consumers as well. And although I'm highlighting some of the negatives there, I did just want to say, like, it's not all doom and gloom. Some countries do in fact offer tax incentives, believe it or not, and they are trying to support businesses so that they can actually attract digital businesses to their jurisdiction. So it can be tax breaks, reduced tax rates. Some of them do like research and development funding as well. So it feels a bit doom and gloomy, but actually there are some benefits out there that digital services don't necessarily know that they can take advantage of.
Certainly. And it might also be helpful to single out some of those jurisdictions that might be especially challenging for businesses, for SaaS businesses, where leaders would need to be aware of. If you're aiming to launch in this jurisdiction, potentially you might want to turn to an advisor.
Yes. So you did touch on it, Victoria, earlier, the US. I mean, they've really gone to town in terms of making a complex tax system. There's 50 states. Every state has their own rules and regulations. There's about 17,000 different tax rates at the moment. And there's kind of another layer of complexity for digital businesses because each state at the moment is reviewing how they tax digital services. So I think that's a very complex process, and definitely engage support where you can on that. Another to note, which comes as a bit of a surprise sometimes, is India. They've progressively been tightening their tax regulations concerning digital services. You know, they saw a gap there and they've been really focusing on that. And they're looking at digital taxation of, you know, goods and services tax and including it within that. And the other one, which we've spoken to a lot of our customers about, is Australia. So Australia have also implemented GST, so goods and services tax, specifically on digital products and services that are direct to consumers. So I've highlighted kind of a few key ones there. I guess it's important to remember that although the US do take the prize for the most complex, each country's landscape is changing, and many countries have very unique, I guess, what I mean is complex in a nice way, but very unique complexities around digital services, because every country is seeing a gap in the market there. You know, they are seeing that they need to be taxing this. This is a way for them to collect tax. And so those are changing regularly. So I'd just say the key thing, engage, you know, don't be afraid to ask the questions and engage experts where you can.
Absolutely. And actually, it does seem that your point is completely reflected in the answers from the poll. In terms of the most difficult part of navigating tax compliance, for most of the respondents, this has been complying with diverse tax regulations across countries. That's 38% of responses. And the tie-in to that has been managing multiple tax jurisdictions and determining tax residency for 17%. 21% of respondents have faced challenges handling cross-border transactions and transfer pricing. Another 17% have seen difficulty in staying updated on changing tax regulations and compliance requirements. And 8% have found it difficult or challenging to navigate international tax treaties and treaty benefits. So lots of cross-border complexity there, as you've already outlined. Andy, I'd like to throw it to you, actually, in terms of potentially a little bit of a case study. What has been your experience with navigating tax compliance as a growing SaaS business? What are the challenges externally and internally?
Yeah, so very, very good points and some great advice there, Olivia. As I said, we've grown significantly as an organisation. We're now headquartered in America. We've grown significantly into Australia, and I'd echo a lot of what Olivia said about, you know, sort of recognising what's going on in those different markets. I mean, my perspective would be that if I'm a growing organisation, I want to focus on developing my new products. I want to focus on developing, you know, my strategies for going into new markets. If I'm a CFO, I'm going to be focused primarily on cash flow. I want to make sure that I'm billing people correctly and I'm getting money into the business, because that's the reason why most growing businesses go out of business is through bad management of cash. I will also be thinking about my forecasting. I'll be looking at my demand. I'll be looking at my and how I can make sure I've got capacity to deliver against that demand. And we're very similar to most growing businesses. We do not want to focus on all of the issues that have been highlighted in your polls around multiple tax jurisdictions, around having cross-border transactions and making sure that we're compliant in all that place. As I said earlier on, there be dragons. That's not the area where my CFO wants to focus his time and energies, because frankly, he's got enough on his plate. And what he wants to be able to do, and it is he in this case, what he wants to be able to focus on is those things that are going to drive the business forward. And so he's looking to get expertise to help him as he thinks of the growth strategies and how we can deliver against that. So when we're going into growth markets in areas like Israel and Dubai and the like, where we're moving into those territories, the strategies that we adopt is we look at things like tax and we think about how can we make sure that we're going to be compliant and doing the right things in that place. We'll also engage with partners. That could be implementation partners, who know how to sell, who know how to engage, who know how to deliver in that place, because that's the best way of getting growth within those markets, is to work with people who know and understand the language, the regulatory frameworks, and can put those things in place. So, you know, recognizing the problem, but thinking about how you can bring an expertise so that issues like intercompany transactions, issues like various tax regulations don't become a blocker. You just want them to be smooth. You want them to be out of the way. You don't want them to block, you know, the growth of your enterprise. And frankly, you know, the countries there that put these tax regulations in place are not doing that to, you know, to obstruct. They in a lot of instances, they're there to try and encourage you to invest and the like. So partnering with organizations that know and understand that sort of stuff is key. And the other thing I would say is, and Olivia's picked up on this as well, is that a Dogs for Life is not just for Christmas. It's not just a case of we'll move into this new geography and we need to make sure that we're compliant. We've done it. Oh, thank God that's finished. We can get on to doing other things. You know, you need to have in place a framework that means that you can continue to be compliant. You can continue to change every, April the 1st, something horrible comes along and we need to be able to take advantage or aware of all these things. So it's not just doing something once, it's making sure that you've got a lasting relationship. Looking at and considering growth and tax as an implication of that, or one element of that, is a strategic driver, and you need to think about these things in a strategic manner.
Absolutely, particularly in jurisdictions like the EU, the UK, India, as you've already alluded to, as jurisdictions with a rapid pace of change. Olivia, I wonder if you could share some of the examples and maybe success stories of where that compliance partnership has worked really well with clients.
Yeah, absolutely. And Andy, thanks. I think you've touched on so many key things there, because one of the customers that we've been working with had a number of kind of key challenges, both externally and internally. You've touched on cultural and market differences. You've touched on kind of regulatory compliance problems. And one of the businesses that we've been working recently, they wanted to launch into a new market, and they identified very, very quickly that the market that they were launching into had a very unique culture, in terms of language, but also in terms of way that the business was done, preferences, business practices. And it can be a really tough learning curve to try and navigate these. And one of the things that this company did, and it was really refreshing to see, was they acknowledged it, and they brought experts in, and they recruited language specific and country specific, SMEs, the subject matter experts, to support them in adapting and to support them, and I guess provide additional strength in targeting this market. And it just gave them that extra bit of confidence to go into the market knowing, we're not just winging it, which can be appealing, but we're actually going in with a bit of intel, with a bit of experience. And it meant that other key areas that are often faced as challenges, like the regulatory compliance, like the issues that there's often around payment and currency issues, it meant that they could flag those very quickly. And they, were able to take the leap and now have, country-specific currencies, payment methods in place. And it's seen a significant increase. And ultimately, what that's also allowed them to do from the tax side is allowed them to calculate and remit relevant country taxes a lot easier without the need to do currency conversion, language conversion for VAT returns, and also not to find themselves tripping up over those country-specific areas. And then I guess internally, one of the biggest things they faced were resources. Andy touched on it earlier, those 3 pillars, one of which is your people. It requires significant input from all of your teams to be able to do this. And it's important that at this point, you are happy to go kind of to somebody else, to an expert, and say, we want to collaborate. It's not necessarily about throwing every piece of the business and the strategy out to somebody else. It's actually about working in a partnership where you can collaborate, where you can fall onto experts if you need them, where you're involving key stakeholders across the business and giving them the autonomy to collaborate also with relevant experts. And it was a really successful project, and meant that the international strategy was a lot quicker than they'd kind of originally planned.
Absolutely. Sorry, go on, Andy.
So yeah, could I just pick on something you said there, Olivia, and it made me think. I mentioned at the beginning about having an external dimension as well, potential external investors, and when talking about growth organisations, we continually have that in our mind. And if you're thinking about somebody who's thinking about investing in a company, thinking about how they can achieve their growth plans, when they come in, they look at that business and they say, okay, let's have a look at your products. Oh yeah, they look good. Let's look at your target addressable market. Yeah, that looks fine. Let's have a look at your management team. Let's check them out and see that they're good enough and strong enough and they can take you forward. But they also take a little look under the covers and they say, all right, let's have a look at your processes. And if you don't have a proper, robust platform in place that addresses things like multi-currency, multi-language, multi-environment, if you haven't got that in place, there's a potential liability. It could mean that you get 2-3 years further down the track and you fall over because you just haven't got what you need. So they will be looking at your systems, they'll be looking at your infrastructure and your support systems to make sure that you're going to give them resilience. They want resilience, they want automation, they want reliability, they want to be able to think about planning and forecasting for the future, not just making sure that you do things as you're supposed to do them. And so it's not just something that you need to do because it's good internally. These people externally that will be validating your business, it might be involving auditors and people like that. They want to make sure that you're doing things in the right way, and you need to have a platform in order to make sure that you can deliver that with some degree of certainty, reliability, and I think that shouldn't be underestimated.
Yeah, you're absolutely spot on there, Andy. So often we're dealing with businesses who've almost come to us at that point where they've gone, we're being looked into, and we suddenly need automation in process. And I'm sure you'll have exactly the same conversations, at Certinia, and suddenly they've acknowledged that actually what they thought was kind of ticking along in the background suddenly needs something a little bit more robust for people to truly believe in them and take that leap of faith, knowing that they've got robust systems in place that can create that stable environment for growth. Because ultimately, if you don't have that stable environment, growth becomes a lot more challenging. So yeah, spot on.
Yeah, and it's kind of making a decision before it's thrust upon you is making a decision whilst you're kind of in control of the situation. So you can plan for it, do it in a proper and reliable way, rather than, oh my God, we've got a problem, we've got this, we've got to sort it out. Ooh, yeah. So plan ahead for your growth platform. Simple question. Are you going to be doing what you do at the moment in 3 years' time? And if the answer is no, then you need to start thinking about what you're going to do to address that now.
Yeah.
Absolutely. Thank you both. And that scalability is really, really important for businesses, especially at the present economic junction that we find ourselves. So actually, the next audience poll ties into this really nicely. Just direct question. Do you feel you are in a good position to ensure tax compliance as you continue on your growth journey? Potentially, this might be a good time to remind the audience that this is an anonymous poll, but it would be interesting to see the results from this. And also just a mid-session reminder to continue sending your questions via the questions tab. We already have a few pithy ones that would be interesting to take at the end. But moving on, I'd like to throw this one to Olivia. How can software businesses effectively plan international taxes, ensure compliance, maximize growth opportunities in new markets, and leverage automation in tech to amplify global tax return procedures? So tall order there, but that's what we're all here to discuss.
Yeah, no, absolutely. I think if you've heard me talk before or chatted to me recently about this, you will have really heard me kind of bang on about, I guess, just 4 key pillars that we really truly believe support businesses focusing on this international growth, the compliance that comes with that. So it's engage, research, monitor, and automate. Engage tax professionals and experts. It is dull. Tax is dull and it's complex. And if it's done wrong, it can be a real pain to clean up. Likewise for, indirect taxes, whether it's cross-border taxes, whether it's local taxes, just engage professionals where you can and don't be afraid to ask those questions. And it really, really will support everything from a compliance perspective and just take it off your shoulders. Research. Going in blind is certainly one strategy. We've seen it before, but you're definitely at risk of putting a lot of time, effort, and resources in for very little return. So review local markets, look at the competitors' footprints there, talk to local experts in that region, and I suppose understand local demand for your service, and talk to other vendor providers and ask for their success stories and ask for the customers that they're already working with in those markets. It's okay to have those conversations. Monitor. We say monitor, keep monitoring. Andy and I both touched on this. There are local regulatory changes which are essential. There are tax strategies coming out. There's compliance documents coming out. There's VAT changes. So just monitor relevant thresholds. Each market has these sales thresholds in place that could be triggering additional tax obligations, be it sales tax, GST, VAT, or get some help monitoring those. And then the last one, and as Andy and I were just talking about, automate. Whether it's monitoring thresholds, consolidating your data, aligning all of your, finance data, looking at registrations, tax calculations, whatever it is, consolidate and automate your tax compliance activities where you can, because once you've streamlined those processes, the reduction in errors, audit mishaps, etc., is really, really low. And it's really kind of safeguards you as a business and ensures that rather than worrying about what to be doing from an automation perspective, that's doing it for you. It's in the background. It's so good that we've got the software now that can automate all of these processes, and just allow the experts to do that on your behalf in the background, and you can focus directly on your business growth. So yeah, I think a lot of information there, but those 4 key pillars are absolutely key. So thanks, Victoria.
That's absolutely fantastic. Thanks, Olivia. So before we delve into, I'd like to ask you one follow-up question to this, actually. But before we delve into that and the audience questions, we have the results of the final poll, which was, do you feel you're in a good position to ensure tax compliance as you continue on your growth journey? So asking the big questions. 52% of the audience mostly feel they're in a good position, but may seek external expertise for complex tax issues, which is encouraging to see that willingness to collaborate. 26% do not feel fully prepared, but are working on improving tax compliance. 13% do feel prepared and have an in-house tax team or specialist, and 9% do not feel prepared. Immediate action is needed for current tax compliance concerns. So I hope you don't mind me saying that if that's the position you find yourself in, please reach out to Olivia. But actually, this feeds nicely into the question that I was going to ask. Would you recommend, and at what point would you recommend, staffing up internally for tax compliance, specifically when prepping for international growth?
Yeah, so I think on that side of things, it's crucial at the point at which you've identified, an international market. It's at that same point that you decide to take action on the tax compliance side of things, because very often what we find is businesses get very excitable, as you should, about going into an international market. It's fantastic. It can happen very fast. And when it happens fast, the tax compliance that is then accrued and the historical, what we refer to as tax liabilities, are then accrued, can happen very quickly. They can be very significant in cost. And yes, Avalara can support you in sorting those out. It is my role to help you in supporting historical compliance out. It would be much better if we were having the conversation as a proactive conversation rather than a reactive conversation, simply for ease of your stress levels, firstly, and also so that there is no distraction from the growth into a market. The US is an example, huge market to grow into for digital businesses. It really is massive. But if you launch and you're very big and then suddenly you're having to deal with a tax project, you're going to be taking your foot off the pedal somewhere. And that ultimately hits the growth side of things. So I would say try as much as possible once you've identified a market to have a proactive conversation.
Absolutely. Proactive versus reactive. That I think is great advice. So actually, we've thrown around this phrase quite a bit in this session, but this is a good kind of definitional question from the audience. Can you please define what you mean by digital businesses and digital products? Is the definition the same in the US and Europe? I'm going to assume that this is coming from stateside. And maybe Olivia, you'd like to start, and Andy, I'd like to hear your perspective on this as well.
Yeah, I mean, in an ideal world, I'd really like the definitions to be the same in every single country, particularly looking at the US. Every state has different rules and definitions of what they refer to as digital products and digital services. Downloaded, not downloaded, live, not live. Can you access it? Is this a subscription? Is it a one-time payment? There are huge complexities around the definitions around this. So we will effectively, we're going to look at the jurisdiction that you're launching into, and we're going to identify the definition and the differences that jurisdiction defines as digital services and digital products. And we ensure that it's a unique rule against what you're selling in that country. Unfortunately, it's not the same across the board. So to answer the question, it changes. It will always change, but we always identify it per jurisdiction.
Absolutely. Andy, Sardinia considers itself a digital business. Do your regulators consider you one? And how do you make that distinction?
Well, the good thing that I would say is that we rely upon experts, which is why we've got people like Olivia to support us. If I could answer the question in a slightly different way, there's when you're a growing business, it's very easy to just you see an opportunity and you go, oh yeah, let's go for that. And you pick up customers where you can through happenstance rather than as a strategy. And if you're moving into those customers that are not in your ICP, if they're not your ideal customers, they might be in different geographies, they might be in a different space, there might be characteristics about that customer that are kind of different. I'm not here to tell people how to run their business, but being very clear and having a growth strategy that's about where you want to go, what the implications are of going into a particular new market or particular new geography or whatever, and understanding what those implications are is really good practice. So not just going after business because you can get it, but going after business because it's profitable and because it's the right business, and doing it in a way that considers some of the things that Olivia's alluded to. The other thing I pick up on is we talk about tax, but I would also consider some of the regulatory stuff. And there have been, in the past 5 years or so, there's issues around revenue recognition, especially in the services space. And in that space, there is some degree of overlap between the different regulatory frameworks. So we have IFRS 15 in Europe, which equates pretty closely with ASC 606 over in America. So there are some similarities there. And again, I would suggest that looking to automate where you can is absolutely the right thing to do, because you don't want to have your revenue recognition caught out and you need to go to spreadsheets to pick up this and that. If you're in a situation where you can set up your billing contracts right, you set up your invoicing arrangements correctly, you set up the revenue recognition all in one place, you can effectively automate the entire process with one click of a button. And that's the kind of framework that you want. It's the kind of platform that you want, rather than one where you have to chase after everything and it becomes messy. Because as a CFO, as I said earlier on, I want to focus on forecasting and I want to focus on cash. I don't want to focus on compliance. I want that to be completely automated.
Fantastic. So actually, I'd love to hear your perspective on this as well, Olivia. I've started picking up clients in new jurisdictions. How do I know if or when I need to start registering for sales tax in the region? How do you recommend smaller companies address compliance and liability as they grow?
Yeah, so that's a really good question, a question we get asked a lot. And there's a huge amount of resources out there, and you can kind of type it into Google and be a little overwhelmed with where to go and what to do there. But I would say, on the Avalara website, being tax experts, we've got a huge amount of blogs and webinars and YouTube videos that can support you, and also downloadable documents of the relevant thresholds on a country per country basis. For the US, it's state by state. So you can go and look at, sales tax thresholds on our website, and you'll be provided with updated material to be able to monitor those. And then in kind of a more advanced way, if, for example, you have already been trading into a number of countries or a number of states in the US, we do have activities where we can take your sales data on your behalf, and we can actually assess that against the unique thresholds that each place has in state, alongside specifically how they treat what you're selling. So we can do what's called, a tax exposure analysis, and that is effectively looking and analysing your sales against the relevant thresholds there.
That's fantastic. So ideally, as Andy has plainly outlined, look at your ICP and be strategic about your growth. But if that growth happens to outpace those considerations, there are resources in place as well.
Absolutely.
Fantastic. So talking about growth again, at which point, and I suspect I know what your answer to this is going to be, Olivia, but at which point in the growth journey would a software as a service company need to consider using a tax platform like Avalara?
Well, I guess, the answer that comes straight away is immediately, but realistically, that's not always a viable option. That's not always a viable option. Andy's touched on the importance of ensuring that you've got streamlined processes, ensuring you've got automations in place. SaaS companies need to consider a tax platform at the point at which the tax calculations and the tax remittance and the monitoring of relevant tax thresholds actually, it becomes complex, and hopefully a little bit before it becomes complex. If you are just selling into the UK, it's a fairly standard process there. We're very familiar with it. But if suddenly you're launching into the US, that's an incredibly difficult place to navigate. Likewise, be it India or Australia, there are very unique tax calculations and rules around how it's taxed. So I would say it depends on your regional thresholds, it depends on your breadth of sales and your growth strategy. But at the point at which you're selling, into more than one country, just have the conversation. It may be that we tell you to go away and come back to us in 6 months, a year, or it may be that we say, actually, now's the time to do it. We're here as consultants on that side of things, and ensure that you're starting at a point where it's not going to be overwhelming, but where it's going to be very much making your life easier in terms of complexities.
Can I take a stab at that as well, Victoria? I mean, from our perspective, it obviously depends on what your plans are. I mean, if you're an organization that's 50 employees and in 2 years' time you want to be 60 employees, then you can probably stick with the status quo. If you're currently 50 employees and you want to be sort of 200 employees in a year or so's time, you're going to start adding complexity into your organization. And before you do that, you want to think about having a platform to support your growth, be that in terms of products, geographies, or whatever it might be. And I would typically use a touch. So assuming that you are a growing business, not just one that's bimbling along and happy to do so. And I would have a sort of touchstone. If you're about 50 employees, and you've got growth plans, then you need to start thinking about the infrastructure that you're going to have to support your growing enterprise. It's going to start having complexity. And I would damp finger if a customer came to me and said, do you think you should invest in Satinia as a platform? Then I would say, if you're this kind of size and you've got these aspirations, then it's worthwhile doing. Otherwise, you can continue using your spreadsheets or whatever, but at some point it's going to get broken, and at some point you want to be in control of that decision before it comes back to bite you.
Yeah, spot on.
Completely. Sticking with that proactiveness theme. In any case, we sort of alluded to this question and to this topic a little bit earlier in the session, but we have a question specifically on transfer pricing rules and cross-border transactions. So straight on, how can SaaS businesses effectively navigate transfer pricing rules and cross-border transactions to ensure compliance? Maybe Olivia, you'd like to kick off?
Yeah, absolutely. So it's likely, if you're dealing with that, you're probably over that potentially 50 person threshold, and you're going into the growth side of things. So honestly, the easiest way to navigate that is to engage experts. Whether it's us, whether it's other experts, we support cross-border and transfer pricing rules and regulations and complexities around that. But the key thing here is to engage an expert to try and automate that process, or at least try to get some advice on how you can manage that process internally if you don't want to automate it yet. But engage key experts here in that area. Andy, I don't know whether you've got anything else to kind of add to that.
Yeah, I mean, it's a case of having a multi-company, multi-currency platform, which is a grown-up platform as opposed to as I've knocked them a couple of times, but spreadsheets. And so many customers that I engage with have issues when it comes to intercompany. If I'm the CFO, I want to see everything in one place, and the rabbit hole between different business units is always around intercompany. So yeah. Having the platform enables you to do that automation and can think about the data. What data do you need to run your business, and is it all in a consistent place that I can easily see? Because if it isn't, you need to do something about that.
Yeah.
Fantastic, thank you. And then another audience question, potentially a bit more of a general one. How can SaaS businesses stay updated on evolving tax regulations? So alluding to that point about tax is not static, and it doesn't freeze at your point of market entry. So how can SaaS businesses stay updated on evolving tax regulations and ensure ongoing compliance in different countries? Maybe Andy, with your depth of experience at this point, you can talk about how Certinia has done that, and then Olivia, you can provide a bit more of a overview.
Yeah, I mean, SaaS businesses, people think about technology as SaaS, they think about it's about software, but the bit that we often miss is the bit at the end, the service bit. And when you're buying software, you're not just buying something for now, you're building an ongoing relationship. 3-year, 5-year contract, whatever it might be. So I would I would look to have a proactive relationship with my technology vendors. Reach out to those vendors to say, okay, so what's coming down the pipeline? What's happening that you're aware of in the next 3, 6, 9 months? How can I share and collaborate with other of your customers that are in the same space as us? They may not be competitors, but they might be similar. They may have achieved similar kind of growth plans in the past few years. What's their experience been? And I think leveraging the relationship that you have with SaaS vendors that are all trying to to collaborate and make things better, more proactive, as you referred to earlier on, Victoria. It's about being proactive, and I think vendors have got a lot that they can offer to support that.
Yeah, I think that's absolutely right. I really echo what Andy said there. Collaboration is key. It can be quite daunting to be out in the market and be like, how do I do this? How do I do that? And monitor relevant thresholds. Where on earth do I go? But there's a huge amount of resources out there, and you'll often find, businesses that you're already working with, partnerships that you already have, they will have recommendations and referrals and methods in how they monitor certain jurisdictions. So just that really, that collaborative approach. I think we went through a number of years where, as businesses, we were quite isolated for kind of that 3-year time frame over Corona and things like that. I daren't say the word, but I think now is absolutely key for growth is that collaboration and just asking those questions. And whether it's to Andy or myself, we've got the resources available, and we can certainly push you in the direction where you can find those resources. So use us. This is what we're there for. As I said at the start, we're probably the only people who enjoy taxes and automation and things like that, but it works and it's good. So it's nice to be able to support people and businesses.
Yeah.
Fantastic. And one last question from the audience. I know I said the last one was the last one, but lots of engagement for this session. So are you aware of any checklists for businesses that are looking for investment, talking about those resources? Olivia?
Yeah, on my side, yes. And it's certainly something that we can share on the Avalara website. You will find checklists for businesses that are looking for investment. And those checklists will go through some of the areas that Andy said earlier. If businesses are reviewing your businesses and looking to invest, there's going to be some key elements they're looking at. They're going to peek under the covers and go, well, actually, what's happening? Everyone seems great here, but actually, how's it working out? What is going on behind the scenes? And it really, some of the checklists that we provide really highlight some of the key areas that they're going to be looking at it. Automation, tax, relevant liabilities, regulatory compliance projects, how processes are in place. It just gives you kind of a fresh to-do list of what to review.
Yeah, and from our perspective, we haven't got anything specifically around tax, but if companies are looking through some sort of business transformation and they need to think about what are the steps that we need to go through, if we're looking at our technology infrastructure, how do we prepare for that? How do we make sure that it's kind of successful? We've got some checklist evaluation guides that support that. And if people reach out to me directly on LinkedIn or through yourselves, or I can make it available with this recording, and we can send it out to people as well.
Fantastic. Thank you both. So last question from me before we close out the session. If a business leader were to come to you today and ask you, I'm starting to think about international expansion, what are the top 3 considerations that I need to have in mind? What would those be? Andy?
Oh, I hope you're going to come to me second. I don't know. It's part of, what's your marketing plan? You need to think about your products, your markets, your partner relationships, how you're going to deliver things. You can very quickly, growth plans can go a bit awry very quickly if you go down the right route. So put in place your marketing plan, and part of that will be financial arrangements, revenue recognition, tax, things like that. So yeah, it's got to be, what's your marketing strategy going to be?
Fantastic. Thank you. And Olivia?
Yeah, I think the 3 things that have really stood out, certainly between all of our conversations today, proactive over reactive. Yeah, definitely the other way around. The first thing, proactive over reactive, just keep it at the front of your mind. The second thing, engage experts, engage professionals, engage subject matter experts in the fields that you're going into, and don't be afraid to ask them those questions. And then the third bit is automate where you can. It will make your life easier. Look at your processes and just review them, and look at the resources and efforts going into that. This is not about taking over people's jobs. This is about making your team the most efficient that they can be, and getting the highest productivity levels from dedicated teams in your businesses. And with that includes automation and allowing them to really progress as individuals and as businesses and as teams for the growth of your business. So yeah, those are my kind of three key takeaways, I'd say.
Can I have Olivia's answers, please? I want her answers.
We might edit this slightly before we send out the video on demand. No, on that note, thank you so much, both. This has been such a wide-ranging and surprisingly in-depth conversation, considering how bitty the topic is. So I hope you don't mind me saying, if anyone in the audience wants to continue this conversation, they can reach out on LinkedIn via Avalara Certinia's website. Thank you to everyone in attendance. We hope this has been useful and a productive use of your morning/afternoon. Please watch out for the follow-up, including the video on demand, as already mentioned, and have a great rest of your day.
Thanks so much, Victoria. Thanks all. Cheers, Andy.
Great. Bye-bye.
Bye.